Wonderful. Well, I hope you can all hear me. Thank you all for coming this evening in what is about the midway point of London Climate Week. And I hope you're still retaining some energy for tonight's discussion. It's such a pleasure to be here for this session for resilience from risk to reward, the insurance sector's role in transformation. And also for me, I'm Nate Matthews. I'm the CEO of Planetary X, which is a climate tech company that works on biodiversity and resilience, especially with farmers and indigenous groups. And it's a pleasure for me tonight because not only do I get to moderate a panel with 4 fantastic leaders in the insurance and just wonderful people as well, but they're also 4 friends. And so that doesn't often happen, and I'm really excited about that. So tonight's session, we're going to keep it fairly relaxed. I've encouraged the panel actually to ask each other questions as well because we want to keep that flow, and also we'll make sure to incorporate some good question time for you as well. So please do reach out, and you know, if you we'll go through some opening statements, and then I've got some questions prepared, but then have some questions prepared yourself, and so we'll definitely have some audience interaction time as well. So I'll begin, I think, with Bijal. Would that be all right? So Bijal is, and I've known each other for many years. She was, in my former role, I was CEO of the Global Resilience Partnership, and Bijal was one of our fantastic people that we partnered with. She's the director of the Mahila Housing Trust, which is an amazing organization working primarily in India, but in other places as well. And Bijal, you've been working especially recently on heat, parametric insurance product for heat, and so maybe you can kick us off.
Yeah. So thank you, Nate. So as Nate said, you know, we work with poor women in informal sector across India, also now with partners in Nepal and Bangladesh. And we started working on climate change issues with the women in informal sector, and especially on heat. And we began actually with capacity building, because when we started talking to the women, climate change was merely God's act for them. So basically capacity building and demystifying the science for them. And that then was followed by, you know, adaptation measures like, you know, giving cool roofs, giving, you know, cooling materials, etc. And then, of course, because you know, those solutions were being adopted by the women, we looked into finance, and so credit. And then, obviously, we found that as you go into adaptation, there is some amount of residual risk which still remains, and that's what actually got us into the idea of launching a heat insurance product. And so the approach all along has been, it's not insurance in isolation, but you look at capacity building, you look at adaptation measures, you look at technologies, and then, of course, insurance is built over all those issues. Yeah.
Fantastic. And we're going to dig into more of that in a moment. And Ekhosuehi, I might pass to you next. So Executive Secretary of the Insurance Development Forum. And maybe you can tell us a little bit about the Insurance Development Forum evolution and focus on resilience over the last few years.
Okay, thank you very much, Nate. It's really great to be here. 3rd time at the Conduit, very cool space. So I work with the Insurance Development Forum. It's a public-private partnership which is led by the global insurance industry, but also co-chaired with the World Bank Group and the United Nations. And we have as our focus, how do we bring insurance capabilities and risk management capabilities of the industry to help to address this issue of building resilience with a focus on developing and emerging markets, and also providing and increasing the availability of financial protection. And this work is obviously important because I think we often take it for granted, the fact that most people in the world actually do not have access to financial protection or insurance in any form. Most developing markets, we're talking about 3% in terms of insurance penetration rates. So when we talk about shocks and impact on economies, on people, the way it plays out in these economies is very different from how it obviously manifests in most developed economies. Personally, I've also witnessed it as a Barbadian Nigerian, the spectrum of developing countries, the vast developing country, huge exposures, floods, droughts, etc. Same as a small island, which is also facing, as we often hear, existential risks when we think about climate. And again, in those contexts, there is, I think, at the forefront of many governments and people, climate change is not an abstract idea, and it hasn't been for decades, right? These are economies and people that are having to deal with these impacts and take big bets without protection. And so for us, the work of the IDF is really about, beyond the underwriting, it's also looking at the risk modeling, it's looking at the other side of the balance sheet of insurers as institutional investors, and how do we use that to drive greater resilience. And that's really at the heart of what we're trying to do as the IDF, with the recognition that it's not only an industry problem to solve, but very much one that we have to work with the public sector on.
Fantastic. Wonderful. Stephanie, if I can pass over to you, CEO of Climate and founder of Climate One. And I love the name, by the way. It's very cool for a new organization. I don't know why somebody else hadn't come up with that, but that's well done. And also an advisor to Amini, which is a deep tech organization. And Stephanie, please tell us a bit about your work, and especially with Amini as well.
This is all right. Yeah, thank you, Nate. Climate One was founded after I've left Aon, one of the large reinsurance brokers, well known by all of us. We're all in the big family. We've all worked together when I was there previously. And I've decided to leave in order to focus on execution projects. And by this, I mean issues that we felt were sort of falling between the cracks, such as supply chain, reinvention, where insurance can play a critical role. So I'll talk a bit more about that when we talk about projects later on. But that's basically what Climate One is an organization dedicated to execution. When you have ideas and you want to actually have impact, very often there's a big gap between what's being announced and what actually happens on the ground. The second thing is my role with Amini, which is just a phenomenal opportunity. I was lucky enough to meet the founder of Amini at COP 2 years ago, at the time where I thought there is a big gap again between large corporates and the first mile of supply chains. And if you look at climate change and climate issues, in reality, 80% of externalities are within the first mile of supply chain. And somehow it has been sort of clouded in a way by the focus on carbon and the conversations on carbon. And it seemed to me that water in particular is probably the biggest risk that we face right now. I always call it the black swan. And I think it's starting to make the headlines, in particular with the flood. But we're also looking at extreme water scarcity. By 2030, people are talking about a gap of at least 60% between our needs and what we'll have in terms of freshwater availability. So that, for me, is the driver. And therefore, one of the things that I focus on within Amini is looking at how we can help bring better data on a large scale, but very granular data on agriculture, because agriculture, as you all know here, holds the key to water security and, of course, to food security. So that's really what we focus on. But Amini is a deep tech company. The founder is ex-NVIDIA, so they don't need an introduction. And I'm just back from a week long with all their engineers, which was a bit sort of, as my kids would say, mind freeze. But it was brilliant. So that's me.
Fantastic. Thanks, Steph. Rowan, tell us about, so you've joined Howden a year ago, and in 1 year, a lot has happened. And would love to get both where you see a vision, but also where Howden is going, because they're very active in this space. But I'll let you brief us.
Yeah, no, it's lovely to be here. My passion and mission is to try and help make insurance fashionable and great again. Okay, so it would take about 100 years, but being here in the conduit with you all, it means I think it could take 10 years. So thank you for kind of turbocharging the mission. And I am shameless at recruiting people into the cause. All right, so leave quickly if at the end. So no, I work for Howden, a bit like Stephanie was saying. It's a big insurance and reinsurance broker that no one's probably ever heard of, although it's getting a bit more well-known, quite big, 18,000 people. And its job is to work with governments or companies to understand their risk, usually from three sources: Mother Nature or Anthro Nature, US lawyers, or people just smashing stuff up. And that's what insurance basically deals with. And but I've gone there because it's a pretty good lily pad, and I went there. I arrived in Climate Week last year, so it's a year in. But it's exciting because it's a different sort of company, and it's privately owned, and it's sort of got a different kind of heartbeat type thing. Work closely with Mahila Trust, and right in the middle of the IDF. Haven't worked with Climate One yet. Used to work with Matt and his old gig, but I don't really want to talk about that. We will talk about that. But my passion is to help to rediscover this incredible institution that we all rely on and take for granted, called insurance. Insurance is a really beautiful thing. It is probably the essence of the scientific, cultural, and social progress that we have undertaken, particularly since the 1500s. It's all those things. It's based on philosophy, science, the lot. And when I talk about insurance, I don't just mean the industry. Insurance is much more than that. Insurance is the welfare. Insurance ultimately is when society, locally, in a village, nationally, or I hope globally, decides what it is it values collectively. What is it that's worth protecting? Obviously, it could be wealth and assets. It could be health and well-being. It could be crops and all sorts of things. It could be social cohesion. Whatever society decides to value. And then society says, we will put rules in place to govern that and to protect that. But as Bijal said, sometimes that's not enough. And we need to have collective pools of resources, usually money, that we all contribute to, sometimes through taxation, sometimes through insurance premiums, but a pool of collective money that we don't know will ever actually receive anything from that pool, because it's an entitlement if certain things happen. If I reach 65, I'll get a pension. If I become sick, I'll get health insurance. But that collective value provides the security substrate, the very foundations for our existence. And that's why 26% of global GDP is spent on collective protection through insurance systems. And yet I'm sure none of us have ever thought about it like that, because it's not taught in universities, it's not taught in business schools, it's not a big feature of public policy. Well, it is, but it's not called insurance. But if we're actually going to confront the three-legged climate crisis, of a resilient transition, and a just transition, and a technology transition, we'll need all those things. 150 years ago, when we had the first carbon revolution, the steam boilers, they were uninvestable. They were far too risky. And engineers and insurers got together and created standards for safe boilers. And suddenly, boilers could become investable. And that's how we're going to speed the transition. We're going to make new technologies investable by making them insurable. And then people moved to cities, because suddenly there were jobs in cities, because lots of steam boilers were doing lots of great things. And cities began to burn. And they burned so much that millions of people died. 1870s, 1880s. And people said they need insurance. But the insurance said, well, you can have insurance, but you need building codes and zoning laws. We need to have a partnership with governments to create safe cities. Otherwise, this isn't viable. And so within 50 years, investment in new cities became so resilient that urban fire was forgotten. So then everybody moved to cities, and by the 1910s, 1920s, there was complete social breakdown, because everyone had left their families and their rural locations, and they had no support. So then we had to have the revolution that we all have enjoyed if we live in the West, and actually many other parts of the world. We have this social insurance revolution of Churchill and Lloyd George in Britain in the 1906, 1908, the New Deal in the 1920s, Beveridge. Best-selling pamphlet in the 1930s, 40s, and 50s was Social Insurance and Allied Services by William Beveridge, which created the blueprint for the welfare state, which was actually all of us collectively. And then we stopped thinking about it. 100 years we had this just transition, this technological transition, this resilient transition of the last industrial revolution. We need to relearn these lessons within the next 5 years. And my contention is we need to rediscover the beautiful institution of insurance, broadly defined, decide what we value, and come together to protect and drive this transition forward. So that's what we're seeking to do at Howden in our own little way, with a bit of help from our trendy friends here at the Conduit.
Very nice. Thank you, Rowan. That's a fantastic tour de force of insurance. And I should have mentioned that you are the CEO of Risk and Resilience at Howden. And I think that really sets a scene which kind of makes me go off script here and think about the first question is sort of you've gone through this transition, and we're in the biggest economic transition that we've ever faced right now. But we need that transition to be transformation. And a key part of moving forward within the transformation is trust. And when I jumped into resilience from agriculture about 12 years ago, the only people who would talk to us from the private sector were the insurance companies, because our CAT models demonstrated, they could see what was coming in terms of the climate. But I think, 10 years ago, even 5 years ago, arguably, that trust really wasn't there. And so I'd like to just ask the panel to comment a bit about how they're seeing trust change with the insurance industry, and how they're trying to build that trust depending on their positions. So Bijal, maybe I'll go back to you, and just thinking about that from working with so many people on the ground, and is that trust there? How is that changing, maybe that relationship with insurance?
So I think insurance still in India has a very low coverage, and especially in the communities that we are working with. And when you are so poor, you're just about surviving, and you are paying money for something, you look at it as a benefit. So you want to receive something back, absolutely. So what the women keep asking is, oh, I'm paying, and what will I get back? But you may not get it back. So you are asking them to invest in something which is maybe a risk transfer. So I think it was a difficult concept, and we had to sort of explain it to them along with climate change and insurance, and these are difficult concepts for them to understand. And so we actually, turned to a lot of gamification to be able to, unlock the strands for them. But in the end, I think it was the trust that they held in us, because we had been working with them for years and years together, almost 30 years now. And with the same women, helping them to sort of climb up the poverty ladder with access to water, sanitation, housing finance, and others. And so they, along with the capacity building, it was important that they trusted us. And I'm happy to say that, and also with the insurance company, it was a tug of war, because this was the first pilot, and we wanted the women to sort of invest in it. And so it was important that the trigger hit for us. And for the company, they wouldn't like it to hit so easily. So there was a tug of war, and what we thought would get completed in 1 year, it took us actually 2 years to launch it. And we finally came to an understanding that the lower threshold will strike within 5 years. It struck the same year, this year that we launched it, because this year the heat in India has been extremely bad. And so for the women perspective, it was good, because they invested and it struck, so I think more and more women will buy. But this question of trust is, I think, that if in the first event it pays them, I think women will understand, they will buy. And it's important to have community partners with whom, the companies can join hand. Otherwise, it becomes very difficult. So, yeah.
That's fantastic. And I remember, 8-9 years ago talking about smallholder farmer insurance, and there was a lot more supply than there was demand because of that lack of trust. But it's nice to see that trust building. Ekhosuehi, I'd love to hear the same thing from the Insurance Development Forum, and how you're working with these huge global insurers and reinsurers and brokers to build that trust and engage in resilience, which is much more about a process than an end goal.
Yeah, so echoing quite a lot of what you said. I think, trust is also a process, and it takes time to do that. From my perspective, I think, to the point I made earlier, when we are talking about low-income communities or developing countries where you don't have deep insurance markets, there's really a process that one has to go through in terms of understanding what the client needs and what the client wants. For a long time, again, I will make the distinction when you have it so readily accessible, you live in, your insurance is built into your car, your mortgage, everything, right? In this context, you really have to go through the process of explaining the value proposition, right? And the value proposition is not only in terms of the technical product and what it will cover versus what it will not cover. What is insurance and what is not insurance? Where is insurance valuable versus where it is not valuable? And you have to be able to engage the client, if it is a small farmer, in the same way that you have to engage a sovereign, right? Around what their risks are, what their exposures are, and how they are financing that or not, and what the cost is. And I can give an example of a project that we have in Peru, which is an ongoing project within the IDF, where they had significant floods in 2018 in that country, huge devastation to infrastructure. And the government was interested in an insurance cover for public schools. And so we had to go through a process to try to distill that, okay, what does that look like? And from an IDF perspective, we tackled bigger projects that are quite more complex than you would traditionally get off the shelf. Part of that was helping the government to develop a database of what does that infrastructure actually look like? What is the quality of that infrastructure? And the importance of that is not just simply for the underwriting of the insurance product, it's also the value that it offers in terms of understanding how do I improve the stock of that infrastructure so that the next time that I have floods, I'm not dealing with the same issue. But there's another side to this, which is why is the government interested in damage to schools, right? It's interested in damage to schools because when children are out of school, there is an impact in terms of productivity of their parents, all kinds of things. There is technical work that we can do, and which we did, to show that when you have that flood occurring, it's not just loss of the buildings and the infrastructure. It is children who are taken out of school and some of whom will never return in terms of access to education. That is a very deep, profound loss when you think about an economy, when you think about the future, when you think about development. So a lot of our work within the Insurance Development Forum is not just simply seeing it as, oh, here's an insurance, whatever, right? But really trying to revisit those principles of what does the client want? And how do we bring that to the fore, make it explicit, and also design better solutions? And I think there's a little bit of humility that we also have to acknowledge, which is when we look at the world around us, the level of uncertainty, climate change, etc., there's a deep need for innovation, right? And that innovation can only come from when you better understand the people that you are trying to reach. And so for us, that's really, really the work. And it is a combination of things. It's better understanding around the risk modeling, the exposures, the impacts, etc. But part of our work in the IDF is also, and I will emphasize this, how do you actually invest in economies where they don't even have basic infrastructure? Sometimes I go and sit with ministers of finance and they say, it's all good and well, I understand my exposure in terms of drought risk, but I actually need hospitals and schools, right? Can you help me with that? And then there's also a role, again, for insurance in terms of how can insurance be used to also unlock investment? We often think of insurance in the sense of, okay, protection after a shock and all these different things, right? But it's how can it enable people to take better risks, right? How can it enable better investments in people, in communities, in infrastructure? And that for me is quite an interesting nexus to explore in terms of the work that the IDF is doing across private and public sector.
That's fantastic, and I really like that comment about taking better risks, and that's the linkage to resilience as well, which is fantastic and nice. Thank you for the grounded example. Stephanie, both speaking from your role with Climate One, but also thinking about it from a data perspective and getting farmers and smallholder farmers to trust data and to trust technology and other things that are coming in and seeing that as a valuable input of their time and resources. I would love to hear your thoughts.
Thank you. So I'm going to bring it all the way down to food. So echoing some of Rowan's comments earlier on, we need to protect what we value. And all of us are relying to an extraordinary extent on our soil health. you're talking about 6 inches of soil, looking after 8 billion people. And when we talk about resilience, my first stop, and I've decided to shut down every other avenue to focus on that, simply because if we do not look after the soil immediately, and we have 5 years, you're right, until 2030, we will run out of water, first of all, but also will be consumed by floods, by flooding. So I'll explain a little bit the link and then come back to the data and how important the data is to enable people, farmers, governments, all the stakeholders to take better decisions because they'll have more accurate information. And I think we're coming into an era where the quality of the data, whether you use satellite data, sensor data, historical data, whoever can blend those data and create sort of meaningful insights will make a big difference. And this is where we are. So there's an era of transparency and insight, which hopefully will change outcomes once we've decided what is worth protecting. So quick revisit of the data on water. So we have 5 years until 2030 when where our needs in freshwater will be 160% at least of what we have. So that alone is quite a worrying, information. Because if you look at water, it's basically a thread that runs through every single human activity, one way or another. First of all, food, that's obvious, but also the energy transition is reliant on water. The data we use, AI, our phones, everything. We need water to create, to produce semiconductors. We need water to cool those data centers. We need water pretty much at every turn. And we have more than 2 billion people already who do not have access to water easily or access at all, frankly. So I think that is the first concern. And if you look at water as a risk from an insurance perspective, I feel like this is one of the most important risks that the industry is facing and that the human race is facing at the same time, which is interesting because it's not very talked about. And it should be a primary concern for all governments around the world. The first thing is who has the food has the power. A government whose people don't eat, when the population doesn't have enough to eat, you have social dislocation. So that's the first thing. Even in the UK, we will see after this summer and after the floods we've had where a lot of farmers couldn't harvest. They couldn't harvest and therefore they couldn't plant. So we're going to see some serious inflationary pressures coming out of that. The second thing is you look at countries that are developing countries where things are even harder. And for them, we need to double down on this focus on nature and in particular on agriculture. By agriculture, I mean sustainable agriculture, regenerative agriculture, because regenerative agriculture leads to greater resilience to flood and also high yields. And that's really the equation that people haven't really quite understood yet. And that's really the biggest risk that I think we are standing on the edge of right now, which is food security around the world, which is floods. We've seen last year a number of floods increasing enormously. I think the floods are probably the biggest. This is the biggest payout for the insurance industry, right? It's 90+%, I think, of payouts from the insurance industry. So this is really a big, big, big issue. And we've seen it everywhere, from Dubai to Brazil, of course, but also to the UK. So it's everywhere, and it's here. So I think we must not continue to sleepwalk, and we can all make choices every day, in addition to insurance, but we make a lot of choice when we look at food systems. So that's a bigger conversation. But coming quickly to the data part of this and the trust. So Amini means trust in Swahili. So that's handy. What we can do with the data, with Amini, is that the ability through satellite data is to look at a piece of land and look at 10 meter by 10 meter and be very precise as to what's happening on that piece of land. So you can see whether there's been deforestation or not. You can see whether the plants are healthy. You can look at plants, you can do leaf analysis. You can get so much data looking also at practices and at outcomes. Because very often we focus on what the farmers are we're looking at the outcomes, thinking, okay, you're practicing regen ag, what are the outcomes? What we need to do is we need to pay the farmers or reward them for the practices, because it's the practices that are going to build our common global planetary health and resilience to flooding and also increase our food security. So that is actually critical. And for me, that data is incredibly useful to build that trust, because once you have precise data, you know exactly who to pay, who not to pay. And I think over time, this is what builds the trust once people are exposed to insurance. So another problem that you touched upon, Ekhosuehi, is in developing countries, people aren't so used to insurance. So it's a very hard sell, which is why very often, coming back to the theme of this conversation, we look to public partners or donors to help us demonstrate the value of insurance in the first year or 2 years before switching on and moving the payment of the premium to someone else, whether it's the off-taker or the farmer, by which time hopefully you will have demonstrated the benefits of the insurance. Because, you know, we're talking about insurance. It's an extraordinary luxury, all of us. Our car insurance, our home insurance, against flooding, accidents. But most people in the developing world have no insurance. So for them, if something happens, if a bad crop happens, it's a year with no income. So it's a totally different mindset. And for these people who live on sometimes $1 a day, to ask them to put 20 cents in insurance is already way too much. So we have to be more inventive, more innovative. And my last comment is going to be that if we do not look after the more vulnerable, if we do not look after all the developing countries that are really fighting hard against climate change and fighting hard against food security issues, we're not going to make it, because we are all so incredibly linked now. So that's basically what I want to say.
Fantastic. Thank you, Stephanie. Yeah, I think it's really, really good points. And I see a hand up. I'm just going to go for one more intervention from Rowan, and then we're going to take some comments and questions. So please prep them. But that's great. Rowan, bit of a maybe a challenging question for you. So I get the role.
From you. From you, mate. I declare.
So I get the trust, and I think Howden is really a leader in this space. But I've heard from the C-suite in some reinsurers that when the climate impacts get too bad, they're just not going to insure. It's uninsurable, and we see prices already, going through the roof in many places. So, touching on how Howden is building trust, and there's obviously the foundation. There's a lot of components to it. But how do you think, as someone with a long history, a deep history in the insurance industry, how can the insurance industry maintain trust in an increasing world of climate extremes?
An easy question. Thank you so much, Nate. Well, first of all, I figured out what we can do together, okay. Climate One and Howden, with the help of the others. We're going to, by next Climate Week, have launched soil life insurance.
Love it.
We're going to ensure that we can insure soil for the long term, so long as one looks after the soil in the right way. In exactly, okay, why not blend the life and health part of the industry with the agricultural side?
Fantastic.
And there we go.
Fantastic.
Right,
and I work with the Soil Association. They'll be delighted. They'll be delighted.
Okay, all
this
right,
is great.
done deal. Well,
thank you.
Hold us to it, because I wanted an invite back to the Conduit next year, because I'm an insurance guy. I don't get invited to the Conduit very much. So,
big shout.
Okay, now I've had time to think about what I'm going to answer. I will answer your question about reinsurance pricing. I'll do it a different way. What we need is a romantic period of finance. And the insurance sector will provide this romantic period of finance. And what do I mean by that? So 200 years ago or so, we had the romantic period of literature and art. And any of you who had to suffer Wordsworth during that A-level will remember that it was a movement about a concern that humanity in Britain and other developing countries at the time, man was being disconnected from nature. And there was an emotional requirement as we were beginning to urbanize and work in factories for a man and woman to become at one with nature. And it was all about creating an emotional connection with nature. And that romantic movement, which to some degree was anti-progress, anti-science, was a massive force in culture and literature in the early 19th century. But I guess they kind of lost that fight because we did urbanize and we did kind of forget nature. And, you know, another, so that was one great thought. You know, Adam Smith, you know, we need to retrain the invisible hand. I think he did think about nature with some moral sentiments, but, you know, we forgot about it. So actually, at heart, we need to reconnect with nature. And I hope we do it with some literature and some poetry and some art. But actually, what we're going to do it is with the majesty of the modeled world. And we're going to actually connect with nature through integrating nature into finance and to credit risk and to actually make it count. But insurance forces you to make difficult choices. And what my dream would be that insurance, broadly defined, becomes the spine through which difficult decisions need to be taken about how we manage risk. So you're right. Wildfire in California is pretty expensive. You know what? Because it's pretty risky. Why is it pretty risky? Because we've been building probably in the wrong places, too much into the interface with the forest or the vegetation. We haven't been managing our utilities very well. Ultimately, usually insurance is risky because you know what? It's probably too risky to live there. Like we had urban fires in the 19th century, we'll have to make those difficult decisions of having a collective medical. And none of us want to have that medical because we know we're a bit sick. And we know it's going to cost us something to get better. We're going to have to go to the gym and reorganize. We're going to have to spend some money. But actually that money is going to reduce a contingent liability. But there's other reasons why wildfire is it's not uninsurable as such, it's just not affordable. It's because in California, and some recent reforms which might help things, insurers have not been able to price based on current levels of risk. Because in the US, in many states, the insurance rates that one has to use as an insurance company are approved by regulators who are elected. So you can imagine their driver is creating low levels of premium, which mean that actually we've had to abandon science. So the reason that people are withdrawing is often not the simple issue of climate change. It's actually about exposure, hazard, and vulnerability. And it's about society having to make those choices. One, about how to de-risk to an appropriate level, not completely, but also, in America, how should that risk be shared? We have it in the National Flood Insurance Program. You know, very rich people with their third home on the coast of Miami are being subsidized through the National Flood Insurance Program by very poor people living in Milwaukee who have a fraction of the flood risk. Is that right? So my dream is that we begin to become much more interested in insurance because actually it defines what we owe each other, but also what we owe each other. So, and the final thing I'd say, so, and obviously, so it's redefining what this thing called insurance, it's a bit like the word climate. The word climate is such a loaded term. Insurance is the same, it's so difficult to have comment, but so my dream is it becomes part of normal conversation. And of course it's got to work when the things happen. But the other thing, and everyone's touched on it, is actually we don't buy insurance because we want to buy insurance. We buy insurance because governments tell us we have to, because it protects society's risk. Or we buy insurance because it enables us usually to access credit or investment. We've just produced a report with our friends at BCG, Howden, you know, $10 trillion of committed low carbon investment between now and 2030, committed, will not happen unless we find new insurance. We've got to get ahead of this. But we buy insurance because it enables us to do things. So the final example I'll give is very quickly, you know, at the moment there's this complete misconception spread by all sorts of forces for all sorts of reasons that most of the small island developing states are uninsurable, uninvestable, and are kind of hopeless. And of course, they could have a Cat 4 or 5 hurricane tomorrow and have a 200% loss of GDP. We've modeled it. Just like me, I could fall down dead tomorrow. Hopefully I probably won't, but I could. But the chances are pretty slim. When we looked at those risks, we could see that actually, rather than using a loss and damage fund as a glorified begging bowl and hoping that, you know, there's something in there when you need it, you could use that fund to provide insurance, to provide a collective entitlement of billions of dollars so that people have that entitlement. It then can reduce their sovereign debt liability. It can improve their credit rating. It can suddenly make them investable. And so what my passion is to say we all have a collective contingent liability, but let's use insurance collectively to share that risk and give people the platform to do what they want to do. So so my final comment will be, when I arrived, Rosie, who's just left, she said, what do you want to drink? And I'd rushed, I was a bit late, got a lime bite from Aldgate, and I was knackered. And it's been a long day, and I said, I really feel like a vodka and tonic, which I hadn't had for ages. And she gave me a vodka and tonic, and she also gave me a glass of water. And I said, I'm trying to make insurance fashionable again. And she said, you can do that, because it's a bit like vodka. You can insure really exciting things, or you can insure boring things. So I want to make sure that when we think about insurance, yes, it's there for the kind of the boring things that we need. It's also there for the really exciting things that we can't do without a bit of collective support. And that's where we're going to get the trust.
And better data.
I'm going to take a quick issue with you there, because we have better data now than we've ever had before. I struggle to find situations when genuinely data is a complete... There can be issues with the data, but very rarely in the modern world, we have so much more data than we had. They did insurance in the 18th century. Usually we can get around it. So of course, data is critical, but I don't want data to always be the admiring the problem excuse for not getting on and doing stuff.
No, it can't be in a developed world, but in the developing world, there's no data, not enough data.
No, I absolutely, there we go.
There
isn't
Maybe
always,
I can intervene.
There isn't always the data, but there is so much more available through all the great technology than ever before.
I agree, but we still need more. We still need more. I would take a quick point on your piece on insurance and really focusing on what we need to do. And you talked a lot about people making choices. And I want to talk about insurance making choices. Because actually insurers, because of the increase and rapid escalation of extreme climate events, is probably at some point facing a risk of, of a market becoming so hard that you can't, you're going to have too many pockets that are uninsurable. So yes, for a while you can have risk pools and you can have different mechanisms to cover for that risk, but we also, over time, and we're not very far from that. I think in the next 5 years we could see huge pockets of uninsurability in the world, whether it's Florida, whether it's California, whether, so that's a first point. And I think that insurance needs to actually focus on adaptation and on helping unlocking capital towards adaptation. I think that is critical. And I think people also forget that the insurance is a fantastic way to nudge people. So the cost of insurance or the type of insurance you can get should help people make the right decision. And it's also how we design insurance. It's also how politicians and policies are redesigned to take into account a warming world. How much water do you use? Are you wearing a lot of polyester? All these questions. And there's I won't go into that rabbit hole, but all these questions need to be reviewed by governments and by insurers, and we need to decide what we need to protect, which is nature, because this is really the only way we're going to have out of the climate crisis. So that's just what I wanted to say in connection to your intervention.
I want to ensure we get time for questions, but I'm going to go to Ekhosuehi and then Bijal very quickly, and I'm also just trying to keep a hold of this panel because they know each other well enough that I could lose control any minute. But Ekhosuehi, please. Yes,
Yeah,
which is good.
I think the two reflections have some level of validity to it. I think, again, reflecting on developing emerging markets, there is a need for better exposure vulnerability information, right? And we have to acknowledge that. And it's also important because if we are revisiting this conversation around risk, around what we value, around innovative financing mechanisms, it also means that we need to be able to provide better services, right? And the services extend beyond just the transaction or the insurance solution in its pure sense to advisory services like early warning systems. How does the information that we have, how can that be used to allow for earlier intervention, risk reduction, etc.? So I do think that this conversation around insurance really has to speak to its broad capabilities, right? The reason why we have many of the developments and also constraints that we see in developed markets is because some of those foundations have been built, right? And we do need to invest in that in developing emerging markets. To the second point, in terms of, the future of the industry, I think that this is a conversation that we are seeing happening within the industry right now, and to the point that I made earlier, also being very clear about where is insurance relevant versus where insurance is not relevant, right? And this is also part of the trust building exercise, because if you are having policies that are triggering every year, then insurance might not be the solution, right? There are other things that might be the solution, but there is a process of engagement that one has to go through to work with the clients to determine what that is. And at the end of the day, you might have a risk that it's not in insurance, right? But it doesn't mean that insurance doesn't add value to that conversation. So those are just my reflections. And then maybe one final thing on trust. Because we've talked a lot about, insurance, people's trust in insurance. There's another dimension of trust, which is how do you also, given what we're seeing globally, cultivate trust across public and private, right? The language, the understanding barriers, this is a hurdle that we have to cross. Even within the industry, people take it for granted because we hear a lot about public-private partnerships. How do you build consensus within the private sector on a direction that we need to go in? It's just as complex in the private sector as it is in the public sector. And I just wanted to offer that as a little bit of a reflection when we think about trust, when we think about climate, and what is actually needed going forward. But over to you.
Yeah, just my reflections on the discussion. So on data, our experience was that, the reinsurer calls the shots. So, India has a lot of very good data. Unfortunately, all that was required for designing the technical index was not available for free. And so we used the ERA5 data set. And in this season, we found that there was a lot of reporting on heat, and it referred to the Indian data set. And there was a mean difference of 3.5 degrees between the Indian data set and the ERA5 data set. And we were really answering the women, who kept calling up what's happening. And it was really difficult to make them understand. So I think while we have more and more data and a lot of data, floating around, it's really important how it sort of interacts with the local data, I think. And that's a very important exercise in trust building. On the factor of trust, it was not only the communities who trusted us, but again, as I said, the private sector, the insurer, was really afraid how they would be able to work with these communities. And we found the role of Howden very, very important, because they were suddenly afraid that if, they don't make a payout, and people feel that, it has triggered because of the Indian data, there might be protests outside their offices, and how were we going to control? So I think it was a very mutual, sort of thing about the trust that we had. And I think my dream, and when I got, I started talking to the insurance people, they told me, but how are you going to do this? Because insurance only works for long-term catastrophic. And I think yesterday at the launch event of Humanity Insured, Charlie did say, and I'm not a technical person in insurance, but Charlie did say that we should be moving towards a 2-year trigger. That's my dream. I know it's very difficult, but I do give some weightage to the fact that if he has said that maybe there is some vision, and they would be able to bring some, sort of discussion into the industry, probably going towards that. I don't know.
Maybe just a reaction to that, which is, I think it's a very important point, and I really love your remarks because it introduces nuance, right, which is really important. We are talking about insurance, which is a market. It has to generate some level of profit. It's a business, right? How do you do that in really difficult circumstances? And so that also took an element of trust, but it's also an element of innovation, right? And challenge.
Yes.
And that is the space that we are in, right?
Yes.
There are products which exist that are under-leveraged. Let us be frank about that, right? But the reality also is that there are spaces, and particularly if you focus on low-income, particularly vulnerable communities, where there does need to be a level of innovation. And this is where it also requires not only you taking a bet right? And the
Yeah,
women who took
yeah,
a bet, but
yeah.
also the industry also willing to say this is an area that we need to invest in and work on. And again, I think that is what we are also trying to do through individual companies, but also through the insurance development.
I think one of the things we need to touch upon quickly is systemic risk. And I think we need people like central bankers and head of insurance to come together and decide what matters, what do we want to insure, what do we want to protect at a global level. Where are the zones of emergency? Where are the sectors of emergency? What makes a difference on the planetary level? And I think that's part of that conversation is also reframing insurance as something that is going to be so critical in the next 5 years that it is very important that things do dovetail from policy to insurance and then and adapt it to the local landscape, of course.
Absolutely, and resilience is very much built on a systemic approach and embracing that complexity, and I think that's what insurance needs to do as well. Now, I've promised time for questions, and I see 3 hands already, so I will start with the first one I saw, which is a gentleman with a hat in the back, and then the lady over on the left, and then we'll go there and then there. And I don't know if we have roaming mics or we... Oh. Do you want And if we could make them brief questions as well, just so we can get through them. Thanks.
Hey, I like the angle of insurance as a nudge, but if we're going to insure more things, especially hard to insure things, I assume you all think that the insurance sector needs to grow in volume in the future. I wondered who you thought the new entrants might be, what kinds of investors and reinsurers might be entering. Who wants riskier investments going forward?
Great, thank you. And I'm going to do 2 at a time. Yeah, I'll do 2 at a time so we can move through. I think it's the lady over there. Thank you.
Thank you so much. My name is Rosalie Ricciova-Prebadi, and I served as a climate technology co-founder for many years. And I have a question for Rowan, mostly specifically. How do you, as an industry, and how can you engage with inventors who are trying to push new decarbonization technologies? Thanks so much.
Actually, since we have 6 questions, let's do 3 at a time. And then maybe this gentleman in front as well. Thank you.
Hi.
If you could give your name as well.
Andrew Ross from A Global Garden, and it's really all for 3 of you, Bijal and Ekhosuehi and you, Sarah. Who owns the problem of solving the problem of water, either in floods or droughts? It's not insurance, it's governments. And what do governments depend on who've got no money? The bond market, with trillions that they need to shift into this arena. And what they need to see is the investable bond instrument that does it for them. That's the role of governments, and we've got local election here in the UK. We've had floods in the UK. We've got a heat wave in the UK. Ha! Bonds issued by local authorities based on nature-based solutions are the answer to exactly what you, Rowan, described in Adam Smith's first book, not The Wealth of Nations, but the concept of social connectivity. And there's the clue, because it's in the communities. In the title of this evening, it's community engagement. And that starts with people on the ground believing that their local authority is doing good things for them. And the bond market will provide that if it's insured by the insurance industry.
Wonderful. Okay, 3 good questions. Anybody want to jump in?
I'll try and answer all 3. I'll try and answer all 3 in 3 sentences. So, to the question about where's the insurance going to come from? A lot of this is going to come from the public sector. So, at heart, governments often are insurers. We like having certain passports because basically it's going to protect us, and actually, usually it's through glorified insurance systems. But I don't think that was the heart of the question. The question was more in the sort of the private sector, wasn't it? And believe it or not, and I know this may seem completely counterintuitive, there is absolutely no shortage of capital that wants to come in and take these risks, particularly capital that can take advantage of what's called parametric insurance, which is becoming more and more known, which is fascinating, great. After 30 years, it's becoming lingua franca. But essentially, you know, you can provide a protection for a city, a company, or a country that, you know, if a Cat 3 hurricane comes too close, you can impute what the losses will be because you can do the modelling, and you know the probability of a Cat 3 coming into a certain geography, and that maybe that's a 1% chance per year, and you need 100 million of protection. So that's, you know, it's 1 million a year of pure premium. You'll have to pay a bit more than that so that people can make some profits and do other things. But, you know, fundamentally, all sorts of capital wants to come in and take that risk, because unlike most other areas of investment or underwriting, this obeys the laws of physics. We'll talk about so many uncertainties about climate change. I tell you what, it is so much more predictable than everything else we underwrite. Okay, so no shortage of capacity, and it's uncorrelated with interest rate movements. So no shortage of capacity. We was involved in the team that provided a parametric insurance program for Morocco. I think they have over 100 players wanted to fight to get on that program, earthquake risk. So that's sort of like first thing. Second thing is the affordability thing. So people say things aren't insurable when actually the issue is, are they affordable? So people living below the poverty line should not be having to spend money on insurance. That should be subsidized. Nothing wrong in that. Half of US agricultural insurance premiums for farmers, richer and poorer in America, is subsidized by the US government. Half. Why do they subsidize it? Because food security is important, because social cohesion in rural counties is important, because votes in rural counties is important. But one way or other, half of agricultural insurance premiums in the US are subsidized. And yet we argue whether we should subsidize farmers in Rwanda. I mean, it's just ridiculous. So that's the second. Don't confuse insurability with affordability. Those are two different things. And that's all about how society locally and globally decides to manage and share these risks and what it values. And to the great question on the insuring technology, a couple of angles here. That's actually the report. If you download it, it's a little bit about that. So there's all sorts of things that can be insured. There is what's called technology warranty insurance. So the usual challenge is you have this new technology which has gone through piloting. It's working at a certain level of scale, but now it needs to go into mass sort of adoption. And investors are worried because is it really going to work? And you can literally now buy insurance to insure the performance of that technology and take that risk away from the investors. It's quite a well-established market. We're focusing on that an awful lot in terms of the new transition technologies. Or, you know.
So do they, by the way?
Oh yeah. That's what I mean. I don't mean. Yeah, it's something that, you know, only it seems insurance insiders know about. But I mean, this is a well-established market which we need. It hasn't been used for low carbon in big terms, I say, but now it needs to be. Or you know, a technology that I used to think was a bit. I was a bit sniffy about it, actually, until I was lucky enough to go to an event like this, chaired by Nick Stern, on carbon capture and storage, and he said, this is absolutely essential. And I always used to think it was a bit of a cop-out for things. No, he said, no, we absolutely need this. The challenge with carbon capture and storage is ensuring the sequestration of the carbon underground for 30 years, because that's how long it needs to be. It obviously needs to be there forever, but from a legal point of view, that's how long it needs to be there to get the carbon credits or the tax breaks in the US. And that's what investors are worried about. So something that we did was repurpose the environmental liability market, which to treat carbon as a pollutant and ensure the long-term sequestration of carbon. And we pulled that off about 6 months ago to unlock investment at scale. So this is exactly what we need to do. Just as 150 years ago, you know, the Factory Mutual created the standards for safe factories as we did with steam boilers. So ultimately, I suppose my ultimate message is we mustn't treat insurance as this thing over here done by these other people. Insurance only works if it's actually by us. So the people doing this great technology, which hopefully you know about, we should be sitting down with insurers and investors and saying, what are the risks that we're worried about? Sometimes people are worried about risks that don't exist. Actually, CCS is quite safe. Hydrogen, another case. So if we can make insurance all of us, we will crack the problem. And decide, as Ekhosuehi says, what is insurance in a pure sense? But also, what can insurance tell us that we need to do to be resilient and adaptive, or other things, to make this viable? So there we go.
Thank you, Rowan. I'd love to hear from others. I'm also cognizant of time, so and I know we have 2 more questions. So if we could, and maybe one more, we might be able to do. So quick interventions, if you'd like to add anything.
What is for the other questions? No, I'm very happy with the answer.
Okay, that's good.
Okay, so maybe add in a little bit. I think, to the question around insurance is also a diversification, right? And as I said earlier, there is a huge concentration in developed markets. So there is an appetite to look at developing countries, developing emerging markets for new products, new solutions, which adds to the diversification in the pool. That's the only thing I wanted to add there. On the point around innovation, I think that's what we need, and we see it across the spectrum. The project that I gave the example of in Peru, there is an insurtech that we were working with in order to build that database. We have projects in Mexico where we used, again, technology in terms of really trying to paint a better understand, targeting of those communities, building better systems so people have access to finance when an event has occurred and it triggers and it gets to them. So I think that there is a real spectrum of opportunities when you think about technology. And so the point that was made, the last point, in terms of who owns the risk, right? That's why public-private partnerships are important. And I don't mean it in a superficial way, right? Part of the work that we are doing in the IDF, which I expressed earlier, was how do you build consensus within the industry, respecting, of course, antitrust and everything, anti-competitive behavior, but it's also the difference that exists within the broader development community and sometimes a reticence in terms of engaging with the private sector, right? And for me, that's also quite a difficult thing, because if we are interested in development, if we are interested in tackling these big challenges, we have to be able to overcome some of these issues, right? And that is precisely where you get innovation. Part of our work, and I didn't really speak about it, is the engagement with the World Bank Group, with the United Nations and others. It's the discussions that we're having with the credit ratings agencies to really think about what are the boundaries of innovation that are required to mobilize finance that is really geared towards resilience. And again, to the work that you are doing, how many people 10 years ago would have thought about heat income insurance, right? Who would have thought? That's a whole new thing. And now we are seeing conversations happening to say, okay, how do we learn from the experiences with SEWA in India and work with pastoralists in Africa, right? That is what we need to be doing. And it doesn't say that, there will be challenges. There's a learning process that one has to go through in order to really refine the products. And we have to get comfortable with that, right? Because ultimately what we are building are new tools to really help people become more resilient. And that means those who can take the risk need to take that risk. And when I say that, I'm not just talking about private sector, I'm also talking about public sector investment when we talk about subsidies, etc., right? But anyways, I'm getting a little too heated at this point.
That's good.
There's some insurance for that.
But what we need is a lot of de-risking, because we need a lot of innovation to fit new emerging problems. So you need that innovation. But to de-risk that innovation in the first step, what you need, I think, is a lot of donor funding. There's a lot of money around, I agree with Rowan, lots of money floating around, looking for good projects. And I think this is where the money needs to go, into innovation for adaptation and resilience.
I will add one more point. Sorry.
Please go ahead.
I struggle a bit, right? Because I always think, if you really focus on people, ultimately people want to be able to have food, they want to be able to go to school, they want to be able to do basic things. We have not tapped deeply enough into those dreams, right? And to really think about how do we help people, right? And those dreams exist at an individual level, but they also exist at a state level. It doesn't mean that they're not complex and we don't have a political challenge in between. But I flag it because I think that part of the conversation that we are having here is that people have dreams, but people know that they're exposed to risks. They know that they have to deal with all kinds of shocks. And so we have to kind of take away the political word insurance, but how do we tap into what are your fears and how can I help you to achieve that? And I think that when we tap into that is where we really see trust being built, where we see innovation sort of emerging. And I just wanted to offer that because I think that that's also an important part of the climate conversation, right? And how we take it from what is really a challenging moment to really get people inspired enough to feel and understand that there are opportunities for solutions. And that's what you're doing.
Yeah, I mean, one of the push for us getting into the insurance was we were already offering credit and to become a part of this innovation cycle that would actually really support the poor and feed in a very individual level data, as you said, you know, what are the dreams of these people? I mean, very few organizations would be able to talk about it and take it to the macro level. I think that's our interest, you know, to be able to work with the insurance industry.
Wonderful. Two last questions, and I know we're going over time. I knew this panel was going to be a challenge for me, but a positive challenge indeed. So we've got this gentleman here, and then Paul.
Hi, my name's Carl from XDI. I kind of want to build on Suhi's point, Ekhosuehi's. So I totally get your point, which is about people in their homes and getting them to feel both physically and financially safe. Now, we do have the data. Our company can give you an insurance premium estimate and level of risk anywhere in the world, middle of India, middle of California, middle of Bristol, whatever it is. So the data's there. Absolutely the data is there. But yet we're seeing families, and I'm based in Australia usually, who are being hit by events. They couldn't afford insurance, which might have been $20,000 a year. So you're right, it wasn't affordable. And they're living in shacks on their own property, okay? In a developed country, a wealthy developed country. So we do a lot of work for banks. We assess mortgage portfolios. So when the bank says, well, we're worried about the default risk of someone getting hit by an extreme event, I say, no, your risk is not the event. Your risk is the insurer. Rowan, you're very charming. But in some ways, our risk is the insurers because the insurers are flying out of these areas. So I guess my question is, how do we corral these somewhat self-serving, wayward actors who we all agree are so fundamental, but in some ways are driven by very short-term decisions and in a way are being forced out and leaving not just those individuals at risk, but also the big institutions we work with, the big banks, who are saying, well, hang on, where did they just go? So I'd really be interested in how you as actors corral these folks into sort of this idea of servants to the community.
Yeah. We'll take one more question before we...
I mean, that is like literally a perfect segue into my question. So I'm so grateful you were just before me. So I have a sort of variation of that, which is you keep reading these reports that these people who are rendered destitute in Ohio because of tornadoes and the insurance have left town and they can't put up the money and their houses are destroyed, or forest fires in California, or people adjacent to rivers or oceans where you have extreme flooding events, and their entire markets that are becoming quote-unquote uninsurable. Everything's in principle insurable, but it's unaffordable to do so. And then I keep thinking to myself, if you could just do this sort of tripartite collective action solution where you took citizens, policyholders, you took governments, and you took insurers, and then you took a resilient approach and said, let's take this, let's go to the core of these problems, let's build sea walls or fire breaks or new resilient materials to be wind resistant, and then find ways of co-funding them, You can build this incredible citizens movement, you can finance resilience, but there seems to be like a collective action
Inertia.
agency problem. So if all insurers were like Rowan, I think the world would be a really good place. But not all insurers are like that man.
No.
And so you need more people like you to be the good, honest broker, and then innovators on both sides. But this seems to me to be the most untapped, remarkable potential we have. And we need to find some way of accelerating it because it's just untapped and sitting in front of us.
Do you want to come? I'll come in.
Yeah, I'm just going to say, I'll be very quick. I think that is a perfect way to set up the problem, and that's exactly what I spend my days working on. And it's saying there's no insurance on its own, it's just a financial construct. Insurance can help us save the day, literally, by focusing on adaptation, and therefore it has to nudge, again, adaptation, and it has to be set up in a way that rewards people who are taking those measures. So people, for instance, restoring coral reef on an endangered, sort of coastal area, etc. So I think your point is 100% spot on.
And it is, because there is a bit of a inconsistency, because I often hear people say, oh yeah, insurance is great, it sends a signal. And then when it sends a real signal, people get upset. And actually, what will become really key is insurability. And actually, insurability, who cares? They care because it has access to credit. So, I've spent a lot of time working in for the insurance, reinsuring Australian insurers. They all want to underwrite, but the cost is 20,000. That's not insurable. Well, it is insurable, but no one can pay it. But why should they write that risk at £10,000 a year and lose 10,000 a year on average? They can't. So they're sending a signal that something has got to be done. So in the village or town of Roma, where there were terrible losses, that forcing mechanism meant that the local authority de-risked Roma with the appropriate municipal investments in sort of flood systems and stuff, became insurable, became investable. So insurance, do you remember I said it forces us to make choices? It forces us to make choices between capital, science, and policy. And so when you hear that something isn't insurable because it's 20,000, don't criticize the insurers for running away because, if they charge 10,000, which is what people afford, they'll lose money. And if they lose money, the regulators won't let them operate, and they'll go bust and there'll be no insurance. That's why we had to redesign urban morphology in the 1880s and 1890s. Look beyond the headline. And look beyond the headline and recognize that so in Australia, it was the last market to be purely private insurance, because then also there was a recognition that to be structurally coherent and to be affordable, there was going to need to be some public subsidy of insurance, particularly in Queensland and other high-risk areas. So use it as you had exactly the right answer to the question. So my dream would be, the answer is people. In the last 30 years, the insurance industry has been transformed by the integration of really proper technical scientific people, including partners like XTI, completely. Now I don't think there will be some scientists in this audience, but there'll be others, dreamers, who take our industry and reconnect it to the mainstreams of public policy and the mainstreams of public choice. And when we can attract that broader community into this fulcrum of national and international decision making, we will achieve it. So, Mera, I have Meriti, I have a dream. Conduit is cool. If we could have the Conduit Insurance Club that meets once every 2 or 3 months, I'll put some money behind the bar. How many of you are within 100 miles of London? Put your hands up. Would you ever consider coming to the Conduit Insurance Club meeting? 1, 2, 3, 4. We were going to do it after summer, September, and the food here is absolutely amazing. Then I'll have hope.
Am I invited?
Of course you're invited. Ekhosuehi is my Secretary General of the IDF. Of course, you're the first speaker. But also perhaps bring some of the projects that we've been doing.
Maybe I can just react, because it's a conversation on public policy, right, with governments. And it's an interesting one because, again, even as insurers, when I think about the work that we've done with sovereigns, right, it's really difficult to find a counterpart because even within governments, there is no central entity often that is responsible for managing risk, right? One of the things that we've been calling for within the Insurance Development Forum is a country risk officer, right? But and we've been, by the way, the industry has been talking about this for the past 15 years, and it's been zero, right? But interestingly enough, we have seen an evolution, and I think because of not only climate, because of the experience with COVID-19, suddenly governments are a little bit more open in terms of how do we better manage risks, because the pool of financing out there is simply drying up, right? And so there is a sense of, okay, we need to better understand these risks and really think about our financing. But again, it's complex and it will take time because we can talk about country risk officers, right? But ultimately, you create the post. Does that post have the authority, right? Because whoever it is then responsible for bringing a certain level of accountability and transparency to risk. That gets very tricky in certain contexts, right? But the point is, I think that, you know, the space that we're going in is that we really do need urgent attention to who is responsible for the risk in a country, right? How are we spending resources or not, right, in terms of managing these risks? And that also helps, I think, in terms of, okay, how then do you engage with international partners to crowd in what is needed in terms of financing? But to Rowan's point, and we see it all the time, which is the difficult decisions that will need to be made and are already, in fact, being made when we are not effectively managing our risks. And I'll give you one more sort of fact point, which is that last year, the humanitarian spend was $64 billion US, right? A little less than half were events that were driven by weather, earthquakes, whatever. Only 1.3% of that money was prearranged. That means that how many billions of dollars the approach was running around trying to scramble to get resources from here and there, right? For me, that is an immediate area where we could do so much more. And that doesn't mean that we do not still maintain our commitment to humanitarian financing, etc. But it means getting a little bit more mature and serious in terms of how we think about risks and the solutions required.
I agree. So most of the countries actually look at humanitarian responses after the event has occurred, and that's what they understand as managing risk. But you are not managing, you are merely responding, yeah? So from the response action, we have now also to cover the managing action, and that's where we need to really work on. Yeah.
Final word, it is an exciting space to be in, even though it's only a few people.
I would love to take more questions, but we're way over time, and I'm conscious that I want to respect people's time. But I would just say I can't wrap it up because it's been too rich of a discussion. But I would say that it's from a reflection. I think insurance industry has been very traditional and arguably quite conservative for a very long time. And now what I hear is dreaming. I heard the word dreams, you know, multiple times. It's innovation. It's embracing nature. And really that is fantastic to hear from an industry where we're in the biggest economic transition of our lifetimes of human history, and the insurance industry seems to be transforming with it, and that's a wonderful thing. So please thanking this wonderful panel. I hope you have a chance to engage with them after as well. And thank you all for coming, and thank you to the Conduit and Rosie and Paul.